What I find is that it takes a long time to read the annual report, even if it's a comparatively simple business. Because if you really are trying to understand it, it's not a bit easy.
Yeah, I would say that on average in a business we're really interested in, even though we know what to skip to some extent, what to read, I mean, it's going to be 45 minutes or an hour on a report, and if there are 6 or 8 companies in the industry, that's going to be 6 or 8 hours perhaps, and then there are quarterlies and a lot of other. I mean, the way you learn about businesses is by absorbing information about them, thinking it, deciding what counts and what doesn't count, relating one thing to another, and that's the job. And you can't get that by looking at a bunch of little numbers on a chart bobbing up and down about or reading market commentary and periodicals or anything of the sort. That just won't do it. You've got to understand the businesses. That's where it all begins and ends.
I know that you read lots and lots of annual reports, and I'm curious what you are reading for, if you would share that with us.
The main thing that they can't mandate in annual reports, I really like to have, I like to know as much as I can about the person that's running it and how they think about the business and what's really going on in the business. Now, the SEC mandates a lot of information, and some of that is helpful, but there's an intent behind the report. I mean, if it's a sales document, I'm less interested. I don't see any way to mandate what I'm talking about. But that's the kind of report I'm looking for. What I'm trying to do as I read reports, I like to understand just generally what's going on in all kinds of businesses. If we own stock in a company in an industry and there are 8 other companies that are in the same industry, I want to own or be on the mailing list for the reports for the other 8, because I can't understand how my company is doing unless I understand what the other 8 are doing. I want to have the perspective of, in terms of market share or what's going on in the business or their margins or the trend of margins or all kinds of things that I can't get unless I know. I can't be an intelligent owner of a business unless I know what all the other businesses in that industry are doing. And so I try to get that information out of a report. If I'm thinking about investing in a specific company, I try to size up their business and the people that are running it. And over the years, I found reading a lot of reports to be quite useful in terms of making business decisions at Berkshire. If we own a whole of a business, I want to own shares in all of the competitors just to keep track of what's going on. And I want to be able to intelligently evaluate how our managers are doing that, and I can't do that unless I know the industry backdrop against which they're working. It's amazing, how well you can do in investing really with what I would call outside information. I find inside information, I'm not sure how useful that is, but outside information, there's all kinds of information around as to businesses, and you don't have to understand all of them. You just have to understand the ones that you're thinking about getting in, and you can do it if you just. But nobody will do it for you. You can't read. In my view, you can't read Wall Street reports and get anything out of them. You have to do it yourself and get your arms around it. I don't think we've ever gotten an idea, in 40 years from a Wall Street report, but we've gotten a lot of ideas from annual reports.
You have discussed what a wonderful business is. One of the criteria is in your acquisition page 23 of your annual report is management. Could you discuss how you decide what good management is and how you decide whether you have a good manager?
The really great business is one that doesn't require good management. I mean, that's a terrific business. And the poor business is one that can only succeed or even survive with great management. And but we look for people that know their businesses, love their businesses, love their shareholders, want to treat them as partners, and we still look to the underlying business, though. If we have somebody that we think is extraordinary, but they're locked into one of those terrible businesses, because we've been in some terrible businesses, and the best thing you can do probably is get out of it and get into something else. But there's an enormous difference, frankly. there's an enormous difference in the talent of American business managers. The CEOs of the Fortune 500 are not selected like 500 members of the American Olympic track and field team, and it is not the same process, and you do not have the uniformity of top quality that you get with the American Olympic team in any sport. You do not get that in top management in American business. You get some very able people, some terrific people, like a Bill Gates that we just mentioned, but you get a lot of mediocrity too. And the test, I think, in some cases that it's fairly identifiable who has done an extraordinary job. And we like people that have batted 350 or 360 in terms of predicting that they're going to bat over 300 in the future. And some guy says, I batted 127 last year, but I've got a new bat or a new batting coach. Some management consultant has come in and told them how to do it, supposedly. We're very suspicious of that. So we don't like banjo hitters who suddenly proclaim that they can become power hitters, and then we try to figure out what their attitude is toward shareholders, and that isn't uniform either throughout corporate America. It's far from uniform. We still want them to be in a good business, though. I would emphasize that, and we feel that. When I gave the illustration of Tom Murphy in the annual report, no one had either the ability, no one could top his ability or integrity in terms of the way he ran Cap Cities. In terms of building the business, he only built it when it made sense, not when it did something for his ego or to make it larger alone. He did it when it was in his shareholders' interests. And they're not all Tom Murphys, but when you find them and they're in a decent business, you want to bet very heavily and not make the same mistake I made by selling out once or twice, too.
My first Berkshire meeting, and I want to mention that I'm very intrigued at the influence you have over the shareholders here. I note that the first beverage they ran out of in the lobby was Cherry Coke. My question is about the Buffalo News. You say in the letter for the 95 report that the newspaper industry has lost another notch in its economic attractiveness. Can you elaborate on that?
Yeah, what you are seeing in newspapers is a circulation trend that has been prevalent for a long time in terms of newspapers per household, but that has been declining, and that daily newspapers, and that I would say the trends of the last couple of years are somewhat worse in that respect. I would say that the ability to price both at the circulation and advertising level has weakened a bit in recent years, not dramatically, but it's weakened a bit. At one time, newspapers really, daily newspapers in single newspaper towns were probably as attractive economically as any business you could find. A large percentage of advertisers had very little choice in terms of using them as an advertising medium. People had less options in the way of learning what was going on around them other than the daily newspaper. So they started from a position of extraordinary strength. They still have a very strong position, and I've tried to emphasize in that report. They're a bargain at the price they sell for. They give you all kinds of information with very low price, and they're a magnificent way for most merchants to reach their customers. But they do not have the exclusive advantages in many cases that they had 15 or 20 years ago. Third-class mail has become more of an option. People have more ways of obtaining information. As we talked earlier, information can be processed electronically and delivered at far lower cost than people dreamt of 20 years ago. So all of those things eat away a little bit. It's still a very fine business. But I don't see anything that will reverse those trends. I don't think that they will necessarily accelerate, but I think that if the only thing you owned in life was a daily newspaper in a single newspaper town 20 years ago, you would feel slightly less secure today than you did at that time, but you'd still be a lot better off than owning virtually any other business.